which allows you, if you're, say you did all your projections, the report came out, and the market just wasn't moving as fast as you thought it would, up or down. You're coming close to your expiry time, but you know it's going to do what you want it to do. You just click on roll over, and for a small little percentage, it rolls you over to the next expiry time. Gives you more time for the markets to move in your favor. Double up is the other feature we offer. See it up here. Double up allows you to take a quick shortcut. If the markets are doing exactly what you thought, moving quickly and you're going to make your trade, and you want to double up, you don't want to go back and lose a couple pips because it's moving quickly, just click on double up and it'll just double your trade for you right then and there. So with iOptions, you have three choices: roll me over, double up, and the new buy me out feature. These three all help you protect your trade. Okay, so we're going to look at the Canadian dollar for a second, and then we're going back to gold. We're going to make one trade in gold before we go for the day. Where's my little Australian? Oh no, it's not Australian. We did Canadian dollar. I'm sorry. Okay, it's plummeted down and it's hanging down there. Pretty low. The markets are not surging back. In fact, the U.S. dollar's continued to drop since we made it back. You can see where it surged back up and tried to hit the point of support where we're at 99.7, and it dropped back down. We needed to get to 99.706, and it doesn't look like we made a smart trade, although we still have 20 minutes, close to 20 minutes before the trade closes out. So again, this is because we jumped in there and didn't do any studying, and we probably jumped a little bit too late, and I wasn't able to see the actual reports. But this is how you would have traded that report. If you would have watched that report and been there and done your evaluation ahead of time, you could have done the right trade on this. And just think of how much money you could have made very, very quickly, because you could have gotten there and taken it going down to the 99.60. You could have traded it back up to when it hit the 99.650, traded it back down, because you don't have to wait for one position to close to open another position. You can have lots of up and down positions going, shorts and longs going. So you're trading each one of these, because as long as you had bought it at 99, sold it at 99.750, you don't care where it is down there. It's below, as long as it's below there. And if you would have bought it back at 99, at the 99 point here, you wouldn't have cared if it only went this far and then went down, as long as you had bought it down here and didn't fall below where you were. So you could have traded each one of these steeps up and down based on that report. Now over the next, between 1330 and 1400, the half hour, it's going to settle down, and then that's going to be it. But this is what happens when you have a financial report, an economics report that comes back above or beyond forecast. Okay, I get some notes here from Joyce, from Rupinder. Okay, it came in at 11.1% versus the forecast of which was 0.2%. That's a huge difference. Okay, so that's what makes the market move. And look at it move. It's still going down. If we would have charted this and written the rules of this trade this morning or this afternoon before we got here, and if you were tracking the U.S. dollar against Canadian dollar, this was a perfect trade. And this happens day in and day out. Not the same currency, but if you're watching if you're trading true fundamentals and just trading from the economics calendar, you can pick and choose which trade you want to enter and spend the couple hours in the morning researching them, getting them ready, writing up your rules of the trade. At 1330 when that report's coming out, you need to be sitting in front of your computer with the screen opened, ready to do one of the two trades, and bingo, you've capitalized on the market and you've made profit. So you could have made a couple $100 by risking only $100 today by following that. And it's a perfect example, and thank you to Joyce for letting us know about the BOC. Okay, let's see, Brodney, I shorted U.S. dollar versus Canadian at 6:30 a.m. with 6:30 a.m. expiration point. Okay, at what point did you get into amount did you, Rodney, what amount did you get into the, and you did that with a binary option, or you did that in Forex option? Can you type me an answer, Rodney, and let's share that with the class. And Joyce, you're right. It doesn't work for all trades. You have to do the clue about it is it has to be an important report and it has to be above and beyond forecast. And yes, you need to also be aware of what the opposite currency is doing, because if you were trying to trade this against another currency that was being very strong today, the reaction wouldn't have been as drastic. But in most cases, if it comes in way above or beyond forecast, it does really work. And it has to be a report that's important or a country that's small. Like in New Zealand, any report affects the currency. Where in the U.S., a little report like this doesn't really affect the U.S. dollar. Okay, but we see, look at that. We do see it rebounding now. It's back up to 99,650 and is trending up. Okay, it's recovering, and it might recover far enough and fast enough to cover us and make us profitable in the next trade. So before we go, we're going to come back here and we're going to take a look. But you're right, trading is not 100%. There's nothing that works for every trade. That's why you have to do your analysis ahead of time, pick your rules of the trade, leave your emotions out of it, and write down. And Joyce, you're the one who picked this up, and I'm sure you would have been able to write down this morning, if this comes out at this, and the thing that's important is it's not just above and below forecast, it's how far above and below forecast it comes. Okay, somebody just asked me something, I got to stop and answer it. Why the asset price is changing its color from red to green. Okay, in the top bar, it's changing because red tells you that I'm out of the money. Whenever it's green, it's I'm in the money. So what we're seeing now is I've got my call at 99.076. I'm not in the money. It's below that blue line. That's where it has to be above. So when it's showing me red, it's I have not earned money. That bar across the top, when it's red or pink, it's telling me I'm losing at this point, or I'm not in the money at this point. So it's giving me information. So if you notice right up here, there's that little peak where it peaked up. Okay, but look at it. It is steadily rebounding, because what we had is we had this huge amount of market activity because of the drastic change, the drastic difference between the forecast and the actual. But look at it. It's almost back up to where we thought it was going to be up, and it looks like it might bounce up high enough eventually to make us back in the money. And that's what's the important thing, is we're dealing with small segments of time off of financial reports. And you can see the peaks and the valleys. Look, it dropped, it surged back up, it dropped, it recovered, it dropped, it recovered, it dropped all the way down. Now, this is called the 99, whatever this is, 99,603 is called a point of support. It's going to be very difficult in the near future for it to drop below that. It will hit that, and investors will kind of push it up. Okay, you can see these lines of support and resistance. Right now, that 99.0650 is a big line of resistance because we can't get it up there and beyond that. So if you notice, it's peaks and valleys, and they all have numerical values. So, okay, so now we just see it dip down again, and it's probably going to dip down to just about where it dipped here, which was the 99,640, and we'll turn back up. If it peaks up less than that and goes straight up, we're definitely going to be in the money before the end of this this trade. Okay, so let's go back over and look at gold. Okay. All right. Now we have gold. Gold, since we started talking, had dropped down to 1717, and now what happened was, in the last short while, gold has picked up some momentum, and it's gone up and hit the 1722, and has dropped back down again. And the thing is, we don't know what's driving gold at this precise moment. we know that the next expiration time we can get into is 1430. Okay, that is too much time from, that's 11 minutes from right now. Because again, things trade in peaks and valleys. So gold is 1719. I would watch gold to see if it drops somewhere in the 1716 range, which is equal to this peak, this point of resistance right here, or I would